And speaking of Netflix, joining us now is Robert Fishman from MoffetNathanson. Robert, how good do those results have to be given how much the stock is up year to date?
Well, it's a great question. I think clearly the expectations are high with this company, but the reality is we're still, there's lots of room to go here in terms of the momentum that the company has in monetizing their engagement and the growth ahead for the company on the revenue side, but really on the profit side and the earnings side. We feel pretty comfortable in this story and where we're going to go from here. There's a lot of different ways that this company can win. So what we're looking for tomorrow is really trying to have a better understanding where the growth is coming from on the advertising front, if the company is going to lean in more on the sports front, and lots of different ways that this company, Netflix, has the ability to really grow in the years ahead.
So are you saying price increases and ad effectiveness are going to be the key?
Well, they've raised prices already, so we're going to continue to see that roll through the results, expecting mid-teens revenue growth. And the result of these pricing increases and the early innings ramp up in the advertising monetization of their engagement really allows a lot of these revenue dollars to flow down to the bottom line. So we're expecting 30% earnings growth this year, and that elevated level of earnings growth to really continue over the next few years, which allows for this premium multiple that you were alluding to at the beginning.
I mean, they've talked about, Robert, the fact that they have a lot of demand for this ad product, but that, the demand is exceeding their ability to build out the infrastructure. So how important is that build out and the speed with which they can do it to really realize the bull thesis here?
Yeah, it's a great question. Again, like coming off the Microsoft relationship has freed up Netflix to really tap into the broader advertising world. So they're not exclusive to the Microsoft relationship that they have been looking backwards. And by building out their in-house technology and partnering with third-party demand-side platforms like the Trade Desk, really has allowed them to start to monetize their inventory in a completely different way. So again, very early in this monetization cycle, when you look at how much they monetize their overall, leading engagement, according to Nielsen, they're at the early innings compared to some of the other streamers out there. So we think that they have a lot of room to go in terms of the advertising growth.
We're seeing a lot of spin-offs, M&A, like the competitive landscape is shifting and changing, not only for the direct competitors, but also for content creators in general. How does that funnel back to Netflix, especially as it continues to double down on things like live events?
Yeah, I mean, you just hit on it. I think what Netflix is going to continue to do is lean in to some of the advantages that the old ecosystem, traditional ecosystem, has held on to. And the more disruptive the Netflix can be in something like sporting events and more big tentpole events, like we just saw with the women's boxing match, they have the ability to really tap into a different level of engagement that is still holding the traditional ecosystem together. So that's going to probably put more pressure on that ecosystem and allow Netflix to take advantage of that much more.